Hello, everybody. Welcome to this edition of Social Security Talk. I am your host, Marc, the guy in the red sweater on this dreary April day. Got clouds out there. We had 80-degree temperatures, 70-degree temps a couple of days yesterday. Today's about 30 degrees cooler, but it is spring. April showers leads to May flowers. That's what I hear, and I will accept that. Our guest today is John Cates. John is with TDC Life. You can see John kind of overdressed for today's podcast. TDC Life is located in Maumee, Ohio. I've known John for a couple of years. We're both involved with a CPA organization across the country called BDO. Our firms are both BRNs, which are Business Resource Networks. And I think I met John. I think I met your organization at the Columbus get-together maybe a couple of years ago. I'm kind of guessing.
Yeah, that sounds right.
What drew me to John and his company is the fact that they are involved in a strategy that only cutting edge and proactive advisors need to be aware of. Everybody else can just tune us out. Fine with me. The strategy is called life insurance settlements. It allows you allows your client to sell their life insurance policy for maybe 4 to 6 times cash surrender value. John, what percentage of policies do not end up in a life insurance death benefit to be paid?
Yeah, so the statistics are quite shocking. First, let me say real fast, thank you for having me today. Very excited to join. It's been maybe about, I think, a year since I was last on. And real fast, I think you had a giant milestone last time I was on. You were filing for Social Security for the first time.
Yes, John, I did. Effective June of 2022 at my full retirement age, my benefits began. And like I indicated earlier today, John, the third Wednesday of each month, my benefits deposit my bank account. So, John, when are you going to file? You look a little younger than I am.
Yeah, so I'm 35. I've got a while to go, right?
Yeah, you do. It won't be there for you, John. No, I'm only kidding.
Yeah,
we get that question all the time from folks around your age or so. Will Social's going to be there for them when it's time? And the pat answer is yes. Social Security is not going away, John. The trust fund will be gone. The 2.9 trillion trust fund will be gone in about 10 years or so. So, John, when it's time for you to file, you will get something out of the Social Security program. Over $1 trillion in taxes comes in each year, and that is what's going to be paid out. Your full retirement age, John, may move, though. Currently, it's 67 for folks born in 1960 or later. But for you, John, I would have to think your full retirement age would be between 68 and 70. You have to work a little while longer. But one thing, John, I need to encourage you to do, though, and you too, Aaron, who's the engineer here on today's podcast, continue to pay into the Social Security program. And that is because that's the money that comes off to pay me. Okay? You pay in, I get paid, I'm happy.
I love it. Oh,
right.
Yeah. Thank you for that. So to answer your question real fast, a statistic, and it's quite surprising, right? But 1 out of every 6 life insurance policies results in a death benefit. Okay.
Okay, 1 out of 6. What percentage is that, John? Let me take out my calculator.
I was going to say, you know what? I normally need a calculator for math like that. I'm getting it real fast for you. 1 out of 6.
17%.
You got it.
Okay. So 17% of policies end up with a death claim. Yep. That means 83% do not.
Yep, they're subsidizing that one that actually does get paid out.
Isn't that amazing, John, how many policies do not end up with a death claim? Yeah, it just is.
It's just shocking.
I used to know the stat, John. Each year, how many policies lapse or what amount of death benefits lapse each year. I'm not sure if I'm asking the right question, but I think it's kind of there.
No, you absolutely are. So, really the statistic that I'm most familiar with is from the Life Insurance Settlement Association. So they're looking specifically kind of at those policy owners that could benefit from a life settlement. So it's more so kind of the senior market, right? And it's the stat is, I want to say, over like $1 billion of death benefit for that demographic alone a year, goes away. And that's right where they're, either surrendering the policies or they're letting them lapse and not realizing there could be some significant value in those policies.
So who is the typical person out there? Oh, by the way, before we talk about that,
Yep.
John, there are a lot of commercials on the TV and the radio about life insurance settlements. The more popular one I listen to or I watch is from Coventry Direct. I see their commercials all the time where got two guys in the basement. They overhear the homeowner saying, I need more cash. And they say, doesn't this person realize that they're sitting on a whole lot of cash through life insurance settlements? So that's Coventry Direct. I used to hear lots of commercials, John, by Lighthouse Life. I haven't heard their commercials in a while, though. And you mentioned another one, Abacus.
Yep. So really, I think when it comes to life insurance, the settlement market, there's, a couple companies that really are geared towards direct advertisements. So you kind of mentioned them right there in the beginning. And we really feel like for the entire industry, a rising tide lifts all boats. So the greater awareness that is generated towards the concept of life settlements benefits everyone in that entire transaction, whether it's a broker such as myself or a buyer such as those those institutions that were just mentioned. We're all going to benefit. Now, the other part of your question you mentioned real fast is you're seeing a lack of advertising from some companies.
Lighthouse Limited.
Yeah. So really, that's probably a greater reflection on the current state of the life settlement market.
Cool.
So we've seen interest rates just rise at a historical level, right? Just the rate and the frequency that we're seeing this. And that has a direct impact on the life settlement market. Let me kind of take you back to, I think, last year when we discussed, the buyers of these life insurance policies are typically taking their capital, leveraging it up by getting bank loans to then buy, not just that one individual policy, but they're putting together an entire portfolio. They're looking to completely have diversified.
Yeah.
Well, with rising interest rates, it's really kind of shifted the market. And I would tell you, Mark, significantly from our last conversation, it went from a seller's market last year to today being a buyer's market. Okay. So kind of deals that we were able to get done last year with, I would say, younger and younger insureds are not really on the table today because these buyers are becoming more selective with their capital, be it advertising or policy acquisition.
Okay. So with higher interest rates, it's becoming more of a buyer's market.
You got it.
Okay. Got it. So, John, who would be an appropriate candidate for a life settlement?
Yeah. Again, kind of going back to kind of what we've seen last year. Last year, we were even able to kind of do some life settlements on individuals in their 50s.
You did? I didn't know that.
It was pretty crazy. But that's really, where I think the market got out in front of itself. People are kind of, the buyers are really searching for policies. With the pullback, I really think anybody age 60 or above should have take a look at their life insurance settlement as a concept. But, we may be pulling back to, a couple of years ago, the demographic really was 70 and up. So I would say, we were doing 50-year-olds, 60 and up right now is where we're at. But I wouldn't be a bit surprised if interest rates continue to go up, that we're looking at age 70 and up unless someone's significantly sick.
So I'm age 67, John.
Yep.
And I think I've got a policy. It's maybe $250,000. Don't quote me. Hey, I bought it's Universal Life. Bought this policy maybe 20, 30 years ago.
Yep.
And the reason why I believe I bought a Universal Life was probably because the premium was more reasonable for me.
Yes.
But now, sooner or later, it's going to be underwater.
Yep.
And I'm going to, the cash surrender value is going to start to be used up. So I personally could be a candidate for life insurance settlement. I personally could be.
Absolutely.
Relatively good health, not great, but pretty good health. So, John, talk about what health of a client, their age, who's appropriate for a life insurance settlement.
Yep. So I would tell you on the age side, right? Age 60 and up is where I would start having the conversation. Okay. And the value is really, Mark, derived by two factors. Okay. The first factor, and it's going to sound a little morbid, but you hit it, is that the health of the insured.
Sure, that's huge. I've got 5 years to go, I'll get more out of my policy. But if I have 20 years to go, well, the buyer will have to wait longer.
Exactly. So I would say kind of health of the insured is the first variable. The second variable is going to be what are the future premiums? What's the cost to carry that policy?
Yeah.
Right? Now, there's some really interesting concept, and there's some sophisticated buyers that are kind of morphing the strategy a little bit. And Mark, this is an interesting one, where some of these buyers are now looking for healthy insurance because they're pairing that life insurance policy that they're buying with an annuity. Because now they become agnostic when the insured passes away. They're now, getting the benefit of the high interest rates on annuities, and they want that insured to live. God forbid they pass early, they acquire the life insurance now to kind of recoup their capital from that annuity purchase.
Okay.
So very interesting.
Okay. So John, the cost to carry the policy now has increased because they have to take out a loan. The cost on the loan is higher.
Correct.
So that's why they're going to offer less for
Yep.
the policy itself.
Yep, exactly.
So some of the main reasons why somebody could be a candidate might be that they don't need the policy anymore. They can't afford the premium.
Yep.
They'd rather reallocate that asset into something else. Is that correct? Am I on target there?
Absolutely. We see a lot of people use the benefit for long-term care.
Long-term care. Mm-hmm.
That'd be one. We see others, right, where they actually, bought a life insurance policy for estate planning, and they're able to kind of plan their estate tax away, making that policy, no longer needed. We see others with term insurance that's still convertible, right?
Convertible. That's the key.
You got it. Yep. Age 70 is kind of when that conversion privilege goes away on most life insurance, term insurance.
Mm-hmm.
So some are just maybe empty nesters saying, hey, I no longer need this term policy. It's still convertible. Let's get some cash for it.
One of the Coventry Direct commercials, the person on the commercial says, well, now I can use this money to take a much long-needed vacation or to pay for grandkids' college. Now,
Yep.
I'm fine with paying for the grandkids' college. That's always a noble thing to do. But to use those proceeds, depending on how much it is, of course, to go on a vacation, that's money you're not going to get back. It's out of your portfolio completely. So I'm not a really big component of that. But of course, though, it depends on how much you're spending. So
Exactly.
yeah, I understand. John, should folks call Coventry directly if they think that they might want to enter a life settlement, or should they contact you instead?
Yeah, I think anybody really needs to be conscious, just like they are in any transaction, of the parties that they're looking to do business with, and specifically in the settlement side, how they're registered, right? Are they registered as a buyer, which is kind of they'd be licensed technically as what they call a provider, and providers their job is to acquire the policies kind of for as cheap as possible. They're representing the buyer only. They may be licensed, such as myself, as a broker. And my allegiance is going to be to the policy seller. So I'm trying to drum up as much competition to then sell the policy for as much as possible. So they really got to be conscious on who they're working with. There's pros and cons to both. Right? If you want to have a quick transaction, you might want to go directly to the buyers, right? Take them up on the advertisements. If you're looking for, you're able to maybe hold off a couple months to have some competition, just heighten for the policy, then you may want to take a look at a broker.
About 2 or 3 years ago, John, a representative from Coventry Direct gave me a call. He said, if you have a life insurance policy, just give me a call and we can talk about it. And I said, well, I'd rather go through a broker because they can give me the competition. I'm going to get a higher figure for it, value. And the guy from Coventry Direct, of course, he said, no, I can give you the highest value for it. But we know that's not true, so don't listen to what you might hear if the representatives from these three companies give you a call directly. So John, tell me a couple of your more recent success stories about clients of yours that have entered into a life insurance settlement.
Yeah, we're working on a case right now, right, where you mentioned your universal life policy, and universal life policies are great, right? Especially premium flexibility. We actually got in a part with this, this individual, right, where the business that the individual owned this life insurance policy, and they were really minimally funding this universal life, right? Not paying kind of more than they needed to. Well, here in May of this year, the pipers come calling and the premium is going to increase to about double what it was before, just because they were kind of minimally funding to a specific age.
How old is this person?
This person's 73.
Okay, so I'm 67.
Yep.
Amazing.
So the way that we're funding this, at age 74, which just happens to be next month, the premium is going to double if they wanted to keep the policy. Well, at this point, in their life, they've already sold their business within the last year. That, hey, they contact me, John, we really don't want to pay this increase in premium. So we're able to, get a deal done before that larger premium kicks in. So very exciting stuff. That would be one example. Another example for a fairly significant policy. This family has an estate tax issue. Through the good work of their advisors, they've been able to completely, plan that estate tax away. So we're going to be looking to liquidate this policy before the next large premium is due. This was a survivorship policy, so that's on both, two insureds, the life of two insureds versus just one.
John, can all policies be used in a life insurance settlement?
All of them can, even non-convertible term. But the giant caveat, we go back to those two variables, right? What's the health of the insured and the cost to carry? So when we talk about non-convertible, you got to be very sick because that, costs.
Non-convertible, yes.
Correct.
But if it's convertible, different story.
Correct.
Yeah. So all permanent life insurance policies, universal life, convertible term can all be used in a life insurance settlement.
And when I say non-convertible term, can if someone is very sick.
Very sick. Very good. Thank you.
Very sick. Yep.
John, walk us through the steps. So, first of all, before you walk us through the steps, let people know how to reach out and connect with you.
Yep. So I think the easiest way could be right through email. Again, my name is John Cates. My email address would be jcates, that's CATES, at tdclife.com. And that's Tom, Denny, and Clyde, TDC.
And phone number, John?
Yep. We can use my cell phone. That's going to be 419-789-5430.
So, John, what you just went over will be a crawler on the screen. Will be on the screen for people to see. And
Thank
please,
you.
everyone, connect with, if you're interested, please connect with John on LinkedIn. You're LinkedIn on John. John, you're on LinkedIn, right?
Certainly do.
So please connect with John on LinkedIn. That's John, and his last name is Cates, Cates. Okay, John, also, there are no restrictions, John. If somebody enters into a life insurance settlement, there's no restrictions as to what that cash can be used for, right?
Exactly. The only thing that we just have to be conscious of is we have to make sure the money's deposited into an account that has the same ownership as the policy. So if I own a trust, if my trust owns a policy, my trust receives the cash. I don't receive it individually.
Got it. Okay, great. But no restrictions. That cash can be used for anything. Go on vacation, pay some college costs for grandkids, invest the money, long-term care insurance, pay off medical bills, whatever. And that, John, can result in additional commissions for the financial advisor, right?
Oh, it certainly can. And that, the conversation, especially one, being able to find, found money is what we like to call it. On average, if a policy does sell, it sells between 20 and 40% of the death benefit.
Okay.
That's significant dollars. And then to your point, we typically get to see a lot of advisors then using that supplemental cash in their, financial plan. So it's both advisor and client. John,
20 to 40% of death benefit. Let's put this into a different way to say it.
Yeah.
What multiple of cash surrender value for the most part will people see?
Yeah, that's where we get maybe anywhere from 4 to 6 times of cash surrender value.
Okay, so I was kind of right when I said that then.
Yep, absolutely.
Okay. John, we only have just a few minutes to go. So talk about the steps. What steps? Well, first of all, proactive advisors need to take the time to meet with their clients and bring up the discussion of their life insurance policies. They don't necessarily do that, but they need to determine if a life insurance settlement is even something that should be considered. So if you're a proactive advisor watching and listening to this podcast, if you're a cutting edge advisor, please, when you talk to your clients during a review, always talk about their life insurance policies. Do not leave that out. So, John, with the remaining minute or so, just talk about what are the steps for an advisor after they determine that maybe a life insurance settlement needs to be considered. What do they do at that point?
Yep. So let me just point out real fast, when you mentioned, Mark, that everyone should be reviewing the life insurance, what's very common, right, since we're now in a rising interest rate environment, is the assumptions that when life insurance policies were sold over the last 20 to 30 years have typically not come true, right?
Yeah.
Interest rates have come down, so cost of insurance may have risen. So it's really important to take a look at these policies because they may not be performing as they were illustrated to back in the day.
Yeah.
That way, there's no ticking time bombs in our clients' portfolios.
Mm-hmm.
But, to understand that, what we typically need to have is an illustration, kind of understanding what is the minimum premium to maturity, and then just some basic information on the health of the insured. Right? Are they in good health, bad health? Just with those two factors, we're typically able to kind of give you a rough appraisal of: do we think there's a market for this policy? Do we even want to, continue the conversation to go forward? And what does that dollar amount do for their portfolio? So really, getting our arms around the life insurance, I'm happy to always to talk with individuals of what we specifically need, but we can get you a rough appraisal. Then you can see if it's right for your client.
So in other words, you're going to ask for information on the policy. You're going to ask for information about medical records.
Yep.
You'll form that out to several potential buyers.
Yep. So actually, internally, we have access to the same kind of software that some of these buyers use.
Okay.
And we can type in that information, and we can give someone a rough range, between X and Y, what we think the policy may fetch at auction.
Okay.
And that's before we even go to auction. So before we really, roll up
auction.
Let
So if it's determined that it should go to auction, you'll send it to auction.
Yep.
You'll get some bids.
Yep.
And then you'll talk to the advisor and or their client about what the bid is and if they want to move forward on the life insurance settlement.
Exactly. Remember, it's not all for everyone, right? So we're
not
always looking. So it's, we're really frank, and we'll have those conversations of, hey, since we also do primary life insurance, we not only talk about life settlement, we're also going to talk about, hey, here's other ways you could maybe even fund that policy to keep it. So we're really holistic, just looking, and that's where we kind of differ from other life settlement brokers, is we do more than just life settlements. We may say, hey, Mark, it's best to keep your policy because of what we found, medically, and here's some different options how you could make that work.
Well, John, we're going to have to conclude today's podcast. However, though, as you were talking about that, what I like to do, John, if you're open to this, be frank, tell me you're not. But, I've got this policy with National Life Group or whatever they're called. I'd like to send to you the last statement I have from them, which will show, I guess, the death benefit. It would show cash surrender value. And then if you don't mind, work something up for me. Yeah. And then you and I can share that on our future podcast with our audience. Would you be willing to do that?
Let's do that. Let's be a good example.
Yeah, it'd be a good example for me too, because I pay $215 a month in a premium, and I don't know if I should continue to pay that. The reason why I got the reason I got the policy to begin with because I was younger, 30 years younger. Let's say I was 40. Young kids, house that I still have a house, it's still not paid for, but still some of the reasons I bought it just aren't there. And like you said, eventually, John, my premium will double, maybe. Yep. It will go up. It will double. I don't know. Might go up more than that. So it would be nice to know what the value of that policy is. I can make some decisions.
Exactly.
So we've been talking with John Cates. He's a life insurance advisor with TD Life out of Maumee, Ohio. I know Maumee, that's near Toledo. Am I right?
Right in our backyard, yep.
And there is a big book fair also in Maumee. Don't know if it still goes on. It's there because of the memory of a child who died at an early age. It might still be Maumee. I was in Maumee once or twice attending that book fair. So, John, there's another aspect of your business that you mentioned you might like to talk about, or you talked a little bit about it, I believe, already. Anything else you'd like to say?
No, as I just mentioned, that's kind of what differentiates us from other life settlement brokers is we also do primary life insurance.
Okay.
So, we're, the only tool in our toolbox is not life settlement.
Yeah.
And that really kind of benefits advisors that we work with as well of, hey, here's, all the options on the table.
As I indicated before, this edition of Social Security Talk is only meant for the ears of cutting edge advisors and also proactive advisors. If you are not one of those advisors, do not talk to your clients about the life insurance policies. But if you are, make sure you bring that discussion up. John, please, again, let our viewers know how to connect with you.
Absolutely. Again, that's John Cates. Email is jcates@tdclife.com. And my cell phone's 419-789-5430. Thank you again, Mark, for all the good work you're doing in the education. This is great.
Pleasure, John. I'm always happy to promote and to market and to bring to the attention our advisors about life insurance settlements. And every class we teach, we talk about life insurance settlements, every one of them. John, thank you so much for being with us today. I will send to you my information about my life insurance policy. You can run the figures, and we'll have another podcast over the next month or so.
That works for me. Thank you, Mark.
Any final comments, John, you'd like to make?
No, that's it. I'm just ready for some spring weather. You mentioned it's gloomy outside. At least we had that warm weather yesterday, right?
Yeah, but next week, John, is supposed to be in the 70s, 60s, and 70s. And I think we might get to 80 in Cincinnati. So warmer weather is around the corner.
Send it up to Mommy, please.
We sure will. This now ends this edition of Social Security Talk. Thank you, John, for helping us understand life insurance settlements a bit more. Appreciate it.
My pleasure.
Bye, everybody.